dollar cost averaging. This is a strategy where you put the same amount of money into your account every month or week or even every day. You put the same amount no matter how the market is doing. Why? Because by consistently putting money into the market, you get in on the highs and the lows. This means your average will be steady, and over the long term, you will see returns, no matter how the market is doing. For example, if you have $1,200 to invest over the next year, you will evenly split that up into 12 $100 increments to invest every month. How many times have you heard this? Buy the dip or buy low, sell high. This sounds like a good idea, but it leads to the question, how do you know when the market is going to be at the bottom of the dip or when the market is at its lowest? And tons of gurus out there will tell you that they have the answer to these questions and that they can tell you for a price, but that's just not true. No one knows what the market is going to do. And for this reason, it's your best bet to just consistently put money in at the highs and the lows. Also, it's just the easiest way to invest. Many brokers offer recurring payments where you can just choose an amount and choose a frequency, and then you never have to think about it again. This is a screenshot from M1 Finance that shows you just how easy it is to set up a recurring payment. That's all for today. See you guys next time.